Akil Stokes here, Forex trader and co-founder of Tier1Trading.com, and welcome back to another weekend edition of The Trading Edge. I hope you guys had a fantastic holiday. I hope your 2019 is getting off to the start you wanted. And I'll tell you what, I'm super excited to be back. For you guys that have been following me on social media, you guys know that I've been away from the market since really December 20th, just not looking at charts, spending time with my family, doing continued education. And today was really the first day that I had a chance to load up my charts and do a full market analysis. And I'll tell you what, I was pretty disappointed. There were lots of news, lots of moves, I should say, as you guys are probably aware of over the break, which again, one of the reasons I tell you guys, I don't think it's worth trading this holiday period, late December, early January. There's not much to be gained. There's a lot to be lost. But those moves have really thrown the market off from a technical perspective. So I did find a few trading opportunities I'm going to share with you guys. One on the euro dollar, actually two on the euro dollar, one on the euro Aussie. But my initial plan of doing kind of a bigger review of the market and giving you guys maybe 5 or 6, 7, 8 ideas has gone out the water. So we're gonna have to stick with 2 pairs today, but you guys will enjoy it anyway. It's quality content. It's something to kind of get you going. And for you guys that are followers and trading on your own, it's something that you can look at and be like, how did my analysis compare to his, assuming you're the same type of trader. Now, before we get into the charts, I want to do some house cleaning. Tier 1 members, if for some reason you forgot, we do kick off things Monday again for our live Q&A sessions. The live room will start on Tuesday through Thursday. I am going to be making a special upload to the strategy development course. As you guys know, I've been doing the strategy development diary over the winter. I was working on an inside bar strategy and walking you guys through the process day by day. Well, because you guys found out to be so valuable, and the content or the comments were amazing, by the way, thank you so much. What I've done is I've chopped those videos up. I've added a little bit more to it as far as explanation to make it a little bit more educational. And I'm going to add it to that course module, which would be pretty cool. And I'll have that done by Monday. Lastly, thank you guys so much. I was really late this year because of some personal issues about letting you guys know about the trader, most helpful trader vote. And I sent out an email and I did a YouTube video with like 12 hours to spare, and you guys stepped up. You did get me elected 3rd most helpful trader on Twitter for 2018. Again, that's not a me award, that's a we award. It shows how great our community is. It shows how supportive you guys are, and that's what we've been sharing with Tier 1 Trading. The fact that it's not just you're getting 2 great educators as far as myself and Jason Greystone goes, but you're getting a community of supportive traders that aren't trying to knock you down and make you feel bad or tell you how better they are than you, but they're trying to help you, they're trying to support you, and I'm still so glad you guys came forward and did that for me. So let's hop into the video. We're gonna start with the euro dollar, and I hope you guys enjoy. All right, so let's get started. We're gonna start off here on the euro dollar daily chart, just to get a little bit of perspective about what's going on in the market. And as you can see, as we left last year, 2018, we've started 2019 really in the same period of consolidation that we've seen before. Now, consolidation is the choppy movement in the market, an area where the market's kind of going back, back and forth, up and down. Sometimes it does so in a real proper manner. You get these channels, which are very nice, but sometimes it's just sloppy. And really, if you're any type of directional type of trader, the best thing you can do is stay away. However, consolidation often does provide opportunities for structured traders and pattern traders. And as we dig deeper a little bit into the lower time frames, you're going to see one of those setups is occurring here in the euro dollar. Now, if we go down to the 60-minute, you can see kind of the recent moves that's happened, right? You can see the kind of the up and down and up and down and up and down. And when you get this type of movement, these type of retracements, extensions, and when they happen in a specific way, in a specific order, and they hit a specific Fibonacci requirement, we have something that we like to call advanced pattern formations. And that's the Gartleys, the sharks, the crabs, the ciphers, the butterflies, all of that stuff. Now, the key is you want to be consistent with how you trade it. There are a lot of different rules out there depending on, what YouTube channel you go to, what book you read. In all honesty, I don't want to say the rules don't matter. They do matter. What's more important, however, is that you're consistent in knowing your rules. And I'll tell you what, I come across a lot of traders that are very inconsistent with how they view patterns. One day it's this Fibonacci requirement, the next day it's another Fibonacci requirement. And when you make that habit, you're really just creating what you want to see, right? If you want to trade a Gartley pattern, then today those rules are going to meet it, right? If you are fearful for some reason, maybe you lost the previous trade, well, now the same rules that you took last week aren't going to be enough. And that's no way to go about finding consistent success in the market, right? Consistent analysis plus consistent execution equal consistent profits. So what we have here is a potential bat pattern setting up. And originally I thought it was a Gartley, just eyeballing it. But this is why we have rules. This is why we bring on fibs, and this is why we do our measurements. And if I take the measurement from our initial impulse leg, right, this is going to be the start of our pattern formation. This impulse leg, this swing high to swing low, right? This big sore thumb, right? That's an American term, sticks out like a sore thumb. This big sore thumb move on your chart that I would guess 99 out of 100 traders would recognize as, whoa, that was a pretty direct move, right? From swing high to swing low, from top to bottom. So that's going to be the start of our pattern formation. We're then going to look for this as being our retracement. This is going to be our A to B. Now I'm using a tool that we use here at Tier 1 to kind of help me a little bit. It saves me time from clicking the triangle tool, drawing it on, clicking the fib, drawing it on. But you can see, right? It actually gives me a little bit of a measurement for what Fibonacci it hits. And you can see the little number up there that says 59.1. You can also see the little deal pop up on the top of your chart that says, hey, Bat, Gartley, whatever, depending on where I lock it at. So knowing that it doesn't hit my Gartley required fib, which would be the 618, I know exactly what I'm looking for. I move on to the next step in my pattern recognition, which is making sure we have a valid C leg. And then what I can do is I can predict where that D completion is going to be. Now, here's something very important. Just because I'm predicting a D completion up at 114.75, and that would be for a potential short trade, it doesn't mean the market's going to go there. So, you don't want to, fall for the trick of saying, well, if that's where the bat pattern completes, I'm just going to enter now because it's going to complete. Well, we don't know it's going to complete. You'd be amazed once you do your back testing. For you guys that have done back testing, you can probably chime in. You're going to be amazed at how many patterns come short of one leg. You get your A, your X to A, your A to B, your B to C. You're fired up, and then boom, it never happens. Or it gets halfway there, then turns around. Or the C leg violates A or something like that. So we always want to wait for the completion of the pattern formation. And what's cool about this one, this completion is going to come right at a previous level of structure. If we just measure this kind of box out, this is going to be our kill zone, right? It comes right at a previous VS1 level, which is a visual support and resistant indicator that we use anyway. So it's kind of like you're getting 2 for 1 here. You're getting the structure-based trade up at this level. You also have an advanced pattern formation setting up as well. So that's going to be a short opportunity. That's going to be on my radar as the week goes on. Something else that you can look for too intraday, and that's how a lot of these setups are because of the mess that has happened in the market, right? At least probably for this first week or so, I'm going to be focused a lot more on intraday, even day trading timeframes, meaning opportunities, meaning the smaller moves, because the higher timeframes are just junk. And until we get some type of rotation or full correction off of what happened, it's really hard to do any analysis with the big wicks on your chart. You're not seeing it so much here on the euro, but you go to your yen pairs or like a pound dollar or something like that, and you'll see them a lot clearer. But another opportunity that stands out for me here is going to be a violation of structure. And this is interesting, right? So we had our initial drop here. We came up to this structure level, and you can see we kind of settled here, right? We settled, we tested it, we tested it, we tested it, we tested it, and then we finally fell down, right? And then we basically corrected that entire move, sucked up all of those losses. However, we refused to create any type of new high here. We basically settled at the same level, which is where we're settling at right now. It'll be interesting to see if we can break this level, if we can violate this level. That should open up opportunity for the market to trade higher. And where can the market trade higher to? Well, potentially that level we had drawn out either as structure looking left or that advanced pattern formation. So I always like to tell our traders, right? We've been putting a big emphasis on target taking and stop loss placement, because I really believe that traders don't necessarily have a problem finding winning trades. A lot of traders will find winning trades, but they'll be off on target projection. They'll be off on stop loss placement. So although they've caught kind of the same move, the move that they expected from the market, they weren't able to get profits because they were too greedy, or they didn't maximize their profits because they were too kind of scared, or maybe their stop loss was too large. So when they lose, they take a bigger loss than they should, or maybe their stop loss is too short, where you don't give the market enough room to breathe. I think those are really more concerning, or those are really bigger issues than actually finding a trading opportunity. But in this scenario, you can actually think like the other trader. You can use that bat formation, even if you're not a pattern trader, as potentially a target projection for a structure-based trade if this happens. So this will be something I'll be looking at as the week goes on, as we open up today, and as we open up our live rooms and whatnot this week. But also from a longer term swing trading perspective, I'll be looking at that potential bat pattern as well. Now, we do have some news coming out for the dollar this week. We have FOMC minutes on Wednesday. I'm not sure how important those are going to be. Powell, our Fed chair, came out and spoke last Friday. So I don't, you would think that would trump kind of the minutes from December, but you never know, right? I'd be a fool if I told you I would expect how the market reacted to everything. But we do have that coming out Wednesday. Also on Thursday, Powell's going to be speaking again in Washington, I believe. So that is another thing that we can potentially watch for in order to we can be aware of when we're trading these dollar pairs throughout this week. Now, before we hop into our next pair, I think this is very important because this is something that affects me as well. The beginning of the year is always a tricky period to trade, really because we're so emotional. I know for me, because I take that extended period off from the market, I'm excited to be back. I'm excited to jump back in the ring. I'm excited to get some action. And I really have to calm myself down to make sure that I'm only taking trades that I'm supposed to trade and not trading because I want to trade. And I know a lot of you guys probably do the same thing. In fact, if you do me a favor, let me know either in the chat box to your right over here, or let me know in the comments section below. I do think it's important for other traders to see that, hey, Johnny suffers from this emotional deal as well. I thought I was the only one. And it's funny, when we get out of that island of being the only one that feels this way, we begin to be a lot more confident with our trading and our trading actions. But it's a tough part of the year because you're either coming off of two kind of emotional highs, right? If you had a very successful 2018, you're excited. You're like, man, that was good. I'm fired up. I don't want this momentum to stop. I want to keep it going. I want to do better. And that you have that urge to kind of trade, get into something right away. If you had a poor 2018, you're the exact opposite. You're like, okay, 2018 was bad. I know it. Throw it out, rip it up, fresh slate. 2019 is my year. Let's do this, right? Flexing and stuff at your computer. Let's go. And then again, you're so excited. You just want to get involved. You want to see that instant good result right there, so you can feed all those happy pills, that happy chemical to your brain, and then you end up over trading and taking stuff that you're not supposed to. And in these times like this, where we just had those recent big moves and we're seeing massive corrections from them, it's really easy to get tricked into saying, okay, I'm just going to kind of hop on the train. And trust me, from personal experience, the worst thing you can do is send your equity curve right into a drawdown to start off the year, because now all you're doing is you're spending the first couple of months trying to dig yourself out, and that can be very difficult for a new trader. So I wanted to sneak that in because I do think that's a very important part to starting each new year of trading. So the only other pair that's on my radar this week, I did have dollar Canada on my radar. There's some interest rate decision stuff coming out on Wednesday, and it's just not a great opportunity. It's something that's on my radar, but nothing specific that I want to bring to you guys right now. We may revisit it in Tuesday is my trading edge day. We'll revisit it Tuesday, perhaps. Depending on what happens. But the Euro Aussie is an interesting situation. You can see this is an example of one of those wicks I was telling you guys about, where we had the spike up and now it's retraced all the way back down. I have no idea what happened. I've been out of the market since December, like I told you guys earlier. I haven't did any research. Honestly, I don't really care, right? I try to keep up to date with fundamentals and whatnot. I do think it's important to be well-rounded. But when it comes down to it, I'm a technical trader, so I don't necessarily care what happened. I just want to know, or I don't necessarily care why it happened. I just want to know what happened. I just want to read the story that price action gives me. So that's most important. Again, I'm sure I'll go back and I'll read some articles just because I'm curious and nosy. But as far as trading goes, I don't really care. It's what happened on the chart. How did the market react to it? And what we saw here is very similar to like a kiss of death trade, like I showed you guys in my last video, where we've come up, we looked as if we were going to violate structure, and then boom, we got spanked back down. And you can see the market has created this big bearish candle. And the question I want to ask myself is, do we have room to go lower? And if we do have room to go lower, where do we have room to go lower to? And this is that forever important IPDE process that we always preach to you guys, right? Identify what the market's doing, predict what you think the market's likely to do next, decide how you may want to get involved, and then execute the trade. And when I look at this right now in my higher time frame, the level that stands out to me is going to be right down here initially, saying, okay, well, here's our next lower level of structure right in this area. This can be a place that price action could go to. And this is a really loose prediction. Doesn't really matter at this point. You can even throw some fibs on if you want. But I just want to have a general idea of if this is something I can look for from a shorting perspective, or if I should just ignore it and not waste my time. So, right, so I keep that and I go down to my lower time frame. We're going to go down to the 4 hour. See if that gives us a different perspective on the market. Here's my magical gold box that I drew out. And you can see that structure level looks slightly different for you guys that are familiar with how we talk about identifying trend, right? Here's an outside return. We followed it up with a, new structure low. And then what do we have right here, right? A violation. Our first retracement back here. And then we move up, right? So you know that these two levels are going to be very important to me, right? And if we go down one more time frame to the 60-minute chart, you're going to see my VS1 levels come up on there as well, right? You can see our VS1 in red right here, our VS1 in green right there at the bottom. And what I'm looking for is this, right? We had a violation. Let's go back up to the 240, actually, give us a clearer look at this. We have a violation of our previous structure lows. Right, this is what I'm seeing. We have a violation of our previous structure lows, right? Lower low, lower close, right? That's what I identified. That allows me to predict that price action is likely to continue lower. Once again, if price action is likely to continue lower, then where is it likely to continue lower to? I've already drawn out my projections. The last question is, how is it likely to get there? And there are two ways. It can break out, continue to break out and go directly down there, or we can see some relief. We can see some type of either some type of relief pattern and a pullback, or maybe just a straight pullback on its own. And those are going to be the questions I want to ask. Okay, well, how can I get involved? Can I trade a breakout? And you go through your trading plan, because that will answer that question for you, right? Here's a clue. If you have to ask if you can trade something, you probably can't. So, write that down, write that down. If you have to ask if you can trade something, you probably can't, because every single way that you should be able to trade should be in your trading plan. So what you do is you look through your trading plan, you look through this situation, looking for a pullback trade. How can I trade pullback trades, or how can I trade extension trades? And it should tell you, okay, look for this, look for that. If this happens, then do that. If this happens, then do that. And then all you're doing is just waiting to see if the market gives it to you. So that's what I'll be doing here on Euro Aussie as well, just waiting. I've already made up my mind that I want to go short. I already know exactly what I want to see in order to get short. Now, right, we can kind of sit pretty, because we just have to wait and see if the market is going to give us what we need. If it does, we take advantage of it. If it doesn't, well, we just look for the next trading opportunity. So I hope you guys enjoyed the video. If you like this premiere feature where we're unveiling it live, make sure you're subscribed. Make sure you hit that little notification bell. That way, as soon as I upload to YouTube and I set the premiere time, you're alerted. You can join us live on the chat. It makes for an amazing experience. And of course, you can always watch it later, as these things are archived. Also, if you're interested in learning, check out the platform, tier1trading.com. There's a link right below in the video description box. We have that 14-day trial for $1. Get on it, take advantage of the education, take advantage of the live room, take advantage of the software, but most importantly, take advantage of the community. Get on that chat. Don't be shy. Say, hey guys, just signed up for a trial. I'm new, just want to introduce myself, and I guarantee your welcome will be warm. But that's just $1. Do it. Get your 2019 started off the right way, and good luck in the markets this week.